The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As almost always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And it looks like we're back on track this week with a little ding, 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 ding. And what else is going on? Well, no follow through to the sell-off yesterday. Up 8 points on the S&P cash. Volume kind of right about what it was yesterday on the way down. But, of course, it was mostly right after this midway through the show, right when it was over, that it started to sell off. So big day up, not yet. But, man, do we have a ton of shorts in the market from yesterday. Up 18 points on the NASDAQ. But could not be all that exciting. What else do we have going on out here? Well, not a lot of volume, not a lot of movement. No continuation from the downside, and a lot of shorts piling in at this level. They're either going to be right, which means they're going to be limited downside as they cover, or they're going to be wrong, and there's going to be a short squeeze of biblical proportions. Well, I'm kind of on that latter half. It certainly looks to me like we could go up and tag 2,400 on the S&P cash with nothing but the short covering from those that are already short the ETFs of the last few days. Not a lot of individual shorts in the S&P 500 or the NASDAQ. But, man, a lot of people piling on in the ETFs and seeing it in the futures. So, what happens? A lot of decay, of course, in those futures. We'll see how long people can stay short those triple and double ETFs as they start to decline in value, even if the market just goes sideways. But as I've said, don't be short a quiet market. And for the most part, with rare hiccups, this market has been, at least for a little while, has been rather dull and quiet. What else do we have going on? Well, I guess it's time to get a little history today.
Then it's all just a little bit of history repeating.
And on this day in 1896, the Olympic Games, a long-lost tradition of ancient Greece, are reborn in Athens 1,500 years after being banned by the Roman emperor. At the opening of the Athens Games, King Georges I of Greece and a crowd of 60,000 spectators welcomed athletes from 13 nations to the international competition. And, of course, it's pretty much been going on. Got a little delayed for the Second World War. A little byproduct of Russian aggression in 1980. It's kind of gone along fairly well. Of course, a lot of those East German gals probably had a little hormone therapy. There's been some rough patches in it. But my favorite is they don't hold them like the original games where everybody just got naked and covered themselves in oil. Never understood that part of it. I guess it's like they say, you got to be there. I just don't understand a bunch of hot, sweaty guys out there running around and the point of getting them all oiled up. Ugh. Anyway, on this day in 1869, the games return after a brief 1,500-year hiatus. And, we get the Miracle on Ice. We get, a good swimmer. And I guess they're kind of fun. But, I do digress. I had some people mouthing off when I was out eating lunch, and the prognostications of the end of the world seem to be everywhere. A lot of yelling and screaming at the top of their lungs how the world was going to end because we went to the nuclear option today in Congress. Historically, I think it's very interesting. In 1892, the Supreme Court ruled that both houses of Congress are parliamentary bodies and that they may make procedural rules by majority vote, and that's all that is ever required. And since 1806, that's pretty much the way it had been run. In 1890, in an effort to make sure that black Americans could not vote, Southern Democrats had kind of changed the rules of the Senate. But for the most part, that whole thing, at one point it was 66 votes. At one point it was 60 votes. At one point it was 57 votes. Kind of interesting that we run our government this way, but the only thing that you need is 51 votes. And my guess is that there will be 52 tomorrow, and that will be the end of that. But I don't know. It just seems like everybody is ready to go off at a moment's notice, and very few people know anything about actually how our country is run or literally anything else. And I guess all you have to do is go to eat lunch, and you will find out how many people are an expert about literally nothing. We will move on. It is a mad market. And for the most part, I am not very bearish. In fact, as I've said, I think that my positions that I have, individual equities, are more important than being long or short the broad indexes, the NASDAQ or the S&P cash. But again, I don't think it would take much of anything to get a short squeeze started and go to 2,400 on the S&P cash. I know there are a lot of jittery people, mostly because of made-up ideas about how everything is going to hell in a handbasket. My guess is that things are probably actually going to work out fairly well over the next few years. And much like 1980, when everybody predicted the end of the world and the start of nuclear war and everything else, they were all wrong and never bothered to apologize for it. I think that something similar is coming on now. We talked a bit over the last week or so about some of these stocks that were going down on no volume or that had broken out and down on no volume. I couldn't buy them. But normally you don't see markets that just fall apart when the worst sectors, i.e. retail, just don't get a lot of hate mail. And L Brands, of course, Victoria's Secrets, a big pop out here today. We talked about some other ones, cons. We'll look at some of these others out here too. But when the worst stocks in the world and the most hated can't get a lot of volume and can't break lows on higher volume, it's time to reconsider. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And bad news here. Heard that Don Rickles just died. I saw him a few times. In fact, actually several times. I can remember at least 3. Spent a lot of time in Las Vegas over the years, about 10 weeks a year, 8 to 10 weeks a year for different conventions, flying in, setting up, tearing down. Kind of a second home for many years for me. Got to see him there, and, of course, always loved him on The Tonight Show with Johnny Carson and some other ones. But I always loved this one clip from Kelly's Heroes, and I just happen to have it here, so we'll play it.
Make a deal.
What kind of a deal?
A deal. Maybe the guy's a Republican.
I always thought that was a great ad lib from Kelly's Heroes in there, where he's trying to negotiate with the Nazis to let them take all that gold out of the bank. It was kind of a fun movie back then. But we'll get back to the market already in progress. My theory out here was that if we couldn't and we didn't see a lot of these super dogs roll over and die, and we talked about a few of them. Cons was another one. But anyway, L Brands back in the trading range. And again, it didn't have any volume. And when you see these things kind of do this, the market is a little weaker. It's not super strong. But I suspect that a lot of these stocks that have done this, they've gotten to lower lows. No real volume has come back in. We're going to see a lot of these things pop back into the trading range. We talked about another one, Con, which is kind of a combination of a Aaron's Rents and a Best Buy. This thing has just been slaughtered. It was, let's take a longer look at this thing. $43 not that long ago. It's trading out here at $11.94. But these things are having some huge action because, of course, no one's decided that it's ever time to take their money off when they're short. When something comes down as hard as this, there's kind of the idea that they're just going to go bankrupt. If you make a huge score like this one, ride it all the way down. I think we were short this one twice in the newsletter and made some fairly good money on disappointing earnings. But at some point, it's time to give up the ghost. Either they're going bankrupt or not. Now, this one went below the previous low of November 4th with 600,000 shares, with 200,000 shares on March 14th. Pretty clear indication that there isn't a lot of juice down here. Not as horrible as L brands, but not as bad as, a lot of people thinking, okay, it's the end of the world. Everything's going out. This is a retailer where we hate them, we hate them, we hate them. And guess what? Everybody just gets short, and then, they give up $3-4 on the upside, which is 50% of the downside. And I just don't understand it. At some point, you got to take your cash when you're short. And one of the most hated stocks for a long time has been Bed Bath & Below. Today, we're actually seeing a little bit of a reversal. Heavy volume down yesterday, and then a pop out here today. Got to $41. But again, a lot of these stocks were testing or came down on huge volume, went sideways for a while, and then came back down. In the last couple of days, we had kind of the washout that normally you see in these. Yesterday, what is it? Control W, there it is. Kind of a big move. What do we have? 7 million shares to the downside. Today, already 10 million to the upside. Now, are they still dogs? The answer is yes. Would I buy them? No. But to me, these are kind of the signals, besides just wild, huge market swings. You want to look. If the worst dogs in the world will not die, at least now, that probably means you're in for a little bit of a bump, and maybe even for a big bump like L Brands or Cons or some of these others on a percentage basis. So just keep an eye on it. Now, we had another question out here in the den about the SOX and whether it can continue at least going sideways or higher. And I think it can. And I was talking to somebody today just before lunch, and it kind of hit me, some discussions, at least lately discussions on Wall Street, or at least what everybody keeps telling themselves on Wall Street. And it's an idea of the virtual company. And this is going to take a little. I got 4 minutes here. Let's take a look at the SOX real quickly. Actually, let's take a look at the SOX. Actually, is there anything out here that makes me think this thing is blown apart? And the answer is no. You had a big volume day down a few days ago at 620,000 shares. Into that right now with this 300,000 shares. It's made a little doji out here today, but dipped through the previous low. Volume's going to be, fairly light out here. So I don't see anything other than maybe one more retry of the top, 137.96. But again, at least this is what a lot of people are saying on Wall Street. And I don't know if I believe it, but at least I'm not 100% against the idea of the virtual company. But this is a change in the way that stocks are valued. And it is a big change from your grandfather's stock. In the old days, you had General Motors. They owned plants. They owned machines to make vehicles with, assembly lines. They had used parts businesses. They weren't a one-legged stool. They were, they had many avenues to make money. Almost all of those, to compete against them, you would have to spend huge amounts of dollars to get involved and go up against those folks. Disruption was very hard to go up against General Motors and Dodge and Ford until, there was a big change in the fuel costs in 1970, and Toyota got its camel's nose under the curtain. But again, did Toyota have to have the same amount of manufacturing prowess, build the same assembly lines, hire the same people to engineer their cars? Certainly did. What is different today, and this is the thing in the SOX about valuations, these companies are basically virtual companies. Do they own an assembly line? No. They farm out their chips to someone else that builds them. Do they own a building? No. They lease their building. Are their employees long-term employees? They work there 2-3 years and then they move on. If you look at Apple, Apple is a bunch of engineers and designers who make a product that is then made by other people, mostly the chips, even the plastics. It's all sent over to China. It's all put in boxes by people in China. Apple really never even touches the product until it gets maybe over here and it goes to one of the ill-named genius bars. I've talked to those guys. They're no geniuses. But in the past, there was all that stuff. You could sell that stuff if the company went bankrupt. At this point now, we have virtual companies. And by the virtue of being virtual, they are almost frictionless. We'll talk about what that means to prices going forward. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, we're up 5 points in the NYSE. We're up 10 points in the NASDAQ. Volume is fairly light, but again, not a big deal out here. No continuation from our downside yesterday, and a bunch of shorts piling on. We'll see how this closes out. But it seems like the last 15 minutes of the day is really the story in these markets, and it's not really much of the daytime or even the open anymore. I think I could trade just fine on a swing basis, looking at the closing quotes for the most part and ignoring most of the middle of the day. We've got some nice movers out here, but again, pretty heavily in certain sectors. We were talking about why it matters so much that a lot of these companies could be like those things you see on TV where they go to the company and there's 40 or 50 or 100 people working, all answering phones. Looks like it's busy. The next day, everybody comes back and everything's gone. The desks, the chairs, literally all you see is some dust where some things were, buying pictures, and it's gone. And these virtual companies don't have a lot of, when things turn down, they don't have a lot of baggage anymore. They can get rid of their leases on their buildings. They can change the way they do it. And probably the most frictionless companies are these semiconductors. When they're selling stuff, everything's outside. Maybe they pay a little bit more for the product, but there isn't a huge expense other than them creating the product. Everything is so outsourced anymore that there just isn't that huge downside unless they build a bunch of stuff that they don't need. And most of these fabs in the SOCs, the fabricators of the chips, you can call up. Well, they did. Apple called up and said, hey, we want 50 million chips on the first day or the first couple of weeks of shipping. And Taiwan Semiconductor can give them 50 million processors. So when we look at the bigger business out here in technology, there is a lot of upside and not that much downside actually in these companies because they own almost nothing. Now, Apple's going to change that by buying this giant space saucer in California. I think it opens this week. Did it open this week? Next week? I think they're going to use about a fourth of it. The whole idea was that they were just going to keep growing, so they started building this thing. And my guess is it'll probably never be more than half filled. Maybe it'll be filled with other companies or something. But, very impressive. There's a long history of companies like Apple building huge businesses, buying lots of warehouses, and then instantly seeing a change in the market. I don't see anything in that. And again, for all the discussion about people saying that there won't be a tax deal, I see the market thinking that there's going to be a tax deal, and they're going to be able to bring that almost $70 billion back that Apple has out there lying around. And again, whether they come in or they don't come back, that $270 billion is still there and a threat as long as the president decides that he wants to repatriate as much of that cash as he can. Almost all these big semiconductor companies or manufacturers have a lot of cash overseas, and that's going to be a real tough thing to ever get over. Every pullback is going to be an ability to buy shares in a company that has a mountain of cash standing next to it. So I'm not any company that has that kind of cash, that has huge margins like Intel, Microsoft, Apple, it's very tough for me to see any of these companies going down significantly. Now, could something really horrible happen? Could the North Koreans fire a nuclear missile at us? Another 9/11? Is there some kind of big thing that I have no idea and the market has no idea to prognosticate? It could always happen. But right now, if everything stays pretty much the same, I don't know why any of these stocks would go down until after a lot of that cash comes back here to the United States. So I would be, if you're thinking about shorting, look for companies that don't have a lot of cash, that do a lot of business here in the United States, and that have a lot of stuff that they can't get rid of easily, like assembly lines, deals for buying commodities to actually make their products, i.e. the car companies. They're probably the most at risk with a major market pullback compared to companies with a ton of cash overseas that can always be buying their shares back. So I'm not a big fan of being short any of these stocks right now under a Trump administration. until at least a lot of that cash comes back. We were talking about other stocks of interest and stocks in this retail space bouncing. Kohl's is one. A good day out here. Again, these people have been pounding on these stocks for a while. This one didn't look as good as some of the other ones, but the last 2 days, even yesterday, you had 3.5 million shares, are kind of bouncing back into the trading range. So again, I'm thinking a little higher, not a little lower out here in the market. And I think it would just take one really good news cycle out here to start a short squeeze and take us to 2,400 on the S&P cash. Let's take a look at some of the other stocks. We talked about Halliburton and the change in energy, and that this had come back, filled its gap, done so on very light volume, and has had a fairly decent move for a market that really hasn't gone anywhere in the NYSE. You came down with heavy volume on the 29th of November. I guess it was decent volume. 12.3 million shares in Halliburton. It had a nice bounce on the 30th with 32 million shares. This thing did exactly what you want to see. It went up. It did so on a lot of energy. It came back down on lighter energy. It kind of filled its gap. This one went just a little farther than I thought, which is a indicator that the market is a little softer. But within a day or two, it's back into the trading range, and it continues to move up. Now, yesterday, nice spike into the oil numbers earlier in the day, kind of sold off, but kind of flat today and not much volume. And I think that gives you an indication of what might be around for some of these other energy companies. They look very good. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post a message in the den. And this is actually a very good day to give me a call because it's kind of a quiet afternoon. And, again, I think most of the action is going to be the last 15 minutes of the day. But, again, I would be wary of the old chestnut in trading, and that is do not be short a quiet market if it's more than an hour, let me put it that way. Because I think you can make some money intraday, but, another day tomorrow, does it gap up 15 points? I think that if you gap up a little, you can go up a whole lot. As I said, just way too many people short for the conditions that are out there. We'll be back after this short break. Make sure and give me a call during this commercial interruption at, 977? I can't even remember the phone number now. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back, as we said, up 6 points in the S&P, up 13 points in the NASDAQ. Volume kind of creeping along. And like I said, almost all the action now is coming in the last 15, 20 minutes of the day, or at least the last few days. We're going to look at some more 52-week highs and see if we see anything going on. American Tower Corporation, these are the people that put up the towers for all the cell folk. And this thing has broken above previous highs. Had some okay volume, about 50% more than the 118.09 high back on October 24th, 2016. So it has broken out. It's had enough volume to keep it at these highs. Nice move out here today. Again, volume very light in the early parts of the days and comes on mostly at the end of the day. So you almost have to wait to the close out here to really get a taste. But looks like it's going to hold up here at the highs today. APO, which is Apollo Global Management. Nice move out here. Nice volume. Nice 52-week high. Could be the end of an ABC on the way up. Let's take a quick look at here. $26.49. So what do you got? Another 60, 70 cents out here to complete a 1-to-1 ABC. And anything else on this one? Energy on this last leg is good. It is much better than the leg from December 23rd up to February 9th. You had kind of a little bit more energy than you'd like on the pullback down to February 24th, but the energy from that February 24th up to today's high has been good, and volume is going to be good today on this one. Apollo Global Management, APO, the symbol, DSX. Now, this one was kind of, I was looking at this one earlier in the day and wondering what was going to happen. You are breaking up and higher with Diana Shipping today, more than the November 16th high. That was $4.97 with 5.7 million shares. Today, though, you only have 1.3 million shares, but it looks like you're going to hold that high, and you're going into a longer-term gap that's been around here since, what is that, the 18th of November of 2015, when these things all got hammered. This thing's actually getting back up here. Don't like the volume, and let's see what the volume down on that gap was. 1.1 million shares. So you got that. What you don't have is a lot of juice compared to this November 16th high. So suspect could be, but a nice move from a shipping company. And maybe that's finally starting to show through for the Baltic Dry Index on some of these shipping companies. Louisiana Pacific Corporation. Again, Again, you can give me a call at 877-927-6648. Louisiana Pacific Corporation, of course, a paper company, right? Don't I see their ads all the time? I better make sure. I'm getting addled in my old age. Building products primarily for the use of new home construction, repair, and remodeling, outdoor structures, lighting fixtures, commercial interruptions. Okay. No paper, all wood. Pre-finished lap and trim products, wall siding. Why do I think about them for making, maybe it's Southern or something. That makes me think of Charmin. Anyway, 52-week highs out here, which is kind of interesting for a building products manufacturer, even with raising interest rates. Not a lot of volume out here today, but it looks like it has gone higher and looks like it was going to hold it. Mobileye, of course, no one wanted to be around this thing as it slowly moves higher. And again, this is going to be bought out, but man, not even pulling back a little. Monsanto, another possible buyout that I've never understood, but I think maybe the buyouts earlier this week now make a lot more sense. We talked a little bit about it, I think, in the den, maybe on this show. Again, I think I've lost my mind. We were talking about how so many people in Germany were trying to find ways to get their cash out of the United States. And at the very beginning, I'd never understood why a country like Germany, or a company in a country like Germany, wanted to buy a company that's products were illegal in its own country. It didn't make a lot of sense, and I think it makes a lot more sense now. That is that many in Germany, the big companies, we talked about them yesterday with that buyout of, God, what was it? Man, my brain's just not working today. What was that company yesterday that got bought out by the German company, by the industrial family with all the juice? Maybe somebody in the den will remind me. Yeah, Panera. So does it make a lot of sense for them to be buying Panera, Monsanto, Bears buying Monsanto? It seems to me like they want to try to get any of the cash that they can out of their country. And maybe the deal didn't make any sense. Doesn't make any sense for them to buy Panera at the price that they bought it yesterday, other than the fact that they want all their stuff somewhere other than their own country. They are scared to death about what could happen. And I think maybe that makes more sense to me now than when this thing came out. I thought it was a stupid idea then. I think it's a stupid idea now, but maybe it's only stupid to me because it means they're going to lose money. But maybe their choice is not between losing money. It's how much money that they'll lose. And this is a deal where they'll lose less money by having their cash somewhere out of the country, which was kind of funny because I was flipping across the dial and saw Larry from BlackRock on, I forget which one it was, CNBC or Fox or somebody. And he was basically telling everybody how the good deals were in other countries, that everything was vastly overpriced in the United States, and that he was going to put money somewhere else. And, of course, the people in those countries are trying to get their cash out of those countries as fast as they can. No wonder there's a deal. Now, maybe they're overestimating the problems in Germany and the dilution of the EU. But, yeah, I think there's a theme out here with these countries and companies in other countries trying to get their cash out of their countries and into ours as fast as they can. STZ, Constellation Brands, another 52-weekend high. Did not hold its high out here, but not a bad move anyway. 4.6 million shares into a 4.5 million share high going back to October 5th, 173.12, 5.5 million shares. But that is kind of interesting. Energy a little off on the way back up, so maybe more of a trading range in Constellation Brands. But again, you know, some of these retailers not looking as horrible as they have. WY, which is Weyerhaeuser, another one at 52-week high. Now, this one has broken above its previous highs. And like some of these companies heavily involved in building products, still at its highs. We want to see maybe 5 million shares out here today. We've got about 2 million shares. We'll see how this day closes out. But looks like it's going to hold its high, too, into the end of the day. We'll come back for our last segment. Give me a call, 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we've got the Trumpster and Mr. Zing, XI. I don't know how you pronounce it. Meeting. Might see a little bit of market permutations on that. Just very, very quiet. No volume up, no volume down. Trading out here. And again, we've seen a lot of volume in the very end of the day. Not much this week during the day. So we'll see how that comes out. I had an email from Dan in Clearwater, wanted to look at Ocular Therapeutics and a very nice looking chart. He says, looking to go along with this one, he's thinking about a $10 target back up to the previous high. Rejection of last swing on much lower lows. Pretty good looking. What I would say out here, though, is there's a triple gap in this thing, and it comes right at 750. And my guess is that's probably where you'd want to buy this thing. If you bought it now, you got to think that there's at least a 50-50 chance you get down to $7.50. You only have 380,000 shares on the downside compared to 4.3 million shares on the upside. So I could say, yeah, you take it here. I would like to see probably a higher close on the S&P today, and maybe buy it at the close. But to me, the ideal buy would be where this triple gap is all over it. Go over this one. This triple gap is all over it. You've got a gap that started on this one at that price on November 14th of last year. It gaps through that yet again on the 4th of January, and then it gaps up that again on the 10th of February. So this $7.50 range out here has got target written all over it. That would be, you got down to 780. If you're already long at that, then you're basically looking at 30 cents. But up here at 815, you've got to look at the ideal place of buying this at 750. But I see what you're looking at. The volume is about as ideal as you can get for looking at these. But this has got probably one of the brightest triple gaps right at $7.50. And that's where I would hope to go ahead and buy that. We got a few minutes left. Let's see if anything is moving. And what's happening on Amazon. We're up, 2 points now in the S&P cash and 3.5 points in the NASDAQ. So, again, light and variable. Little downside out here. Volume yesterday was 7.5 million shares to the spike upside. Today we're already down on 5 million shares. So I think you can make a case that you're going to get a little bit more volume to match yesterday's volume. Again, I would not be playing this using the equities. I'd only be playing Amazon using using options. And was this a horrible move to the upside? 1, 2, 3, 4. No. Could you expect a 50% retrace? I think you can. So that takes you to what? 830 to 923. Maybe 875, something like that on a retrace. And my guess is that 875 or 880, people are going to be all over this trying to buy it yet again. We will see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. Hang on for Tom O'Brien and Andy Heck at 5. And we'll see you on Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.